Greetings from SDMIC classes. Nothing is impossible for a brave and hardworking person with a willing mind. You should have a willing mind to achieve your goals. We continue with the chapter 1, Introduction to Partnership and Partnership Final Accounts, part 9. This is the 9th class. Hope you must have watched the previous classes. I believe you all must have understood. I request you all to pay attention. We were discussing some important adjustments in the final accounts. Let us continue. We discussed 11 points: closing stock, outstanding expenses, prepaid expenses, income received in advance, income receivable, bad debts, provision for doubtful debts, reserve for discount on debtors, depreciation, interest on capital. 10th point was in 3 parts: interest on capital, interest on drawings, interest on loan taken. And 11th point last we discussed were interest on investment or loan given by the firm. So now we will continue with point number 12 onwards. Important adjustments in the final accounts. Closing stock we discussed, outstanding expenses, prepaid expenses, income received in advance, and income receivable, bad debts, reserve for doubtful debts, reserve for discount on debtors, depreciation. Then in the last class, interest on capital, interest on drawings, interest on loan taken, investment or loan given. So we discussed and have given examples of working and where the entry is to be taken, where the effect should be given. That we discussed and I showed you. If you did not understand, please watch again. You will come to know that. Now from 10th point onwards, let us see what is the 12th point. 12th point: if any goods destroyed by fire, and if it is insured, what is the effect given, and if it is uninsured, what will be the effect given. So let us discuss. If it is an insured good destroyed by fire or accident, trading account credit side gross amount, whatever the amount destroyed as per the stock register or whatever the stock records, that whatever the amount destroyed by the fire should be credited to the trading account. And in the balance sheet asset side claim amount. I'll show you that example, then only you will come to know. Balance sheet asset side the claim amount, because it's till the time it is not received, it should be shown in the balance sheet in the asset side. And then in the profit and loss account, debit side amount of loss. Suppose if any if the claim is not settled full amount, for example, if it is 1 lakh and if it is the claim amount is 1 lakh and the same claim sanctioned by the insurance authority is suppose 50,000, then the 50,000 is a loss. So that loss, that remaining means whatever the claim amount receivable should be minus from the total amount of the loss, and the balance should be debited to the profit and loss account. I'll show you the example. And okay, let us start working one by one. Insured goods destroyed by fire. Say loss of goods by fire is equal to 50,000. Just see. This is for an example I am showing for a working to make you understand. So claim amount sanctioned by the insurance authority is 40,000, and the additional amount will be what? 50,000 minus 40,000, because this amount will be received from the insurance company. So now this extra amount, this additional amount, the extra loss of the, because out of the 50,000, 40,000 is claim amount, and the balance 10,000 is a loss. So where the effect will be taken, just see. 12th, goods destroyed by fire, insured, that amount is 10,000 means that is a loss amount. And now what is the total amount? The first entry will be like this. This is 12th. This gross amount will be credited to the trading account. See, the total amount was, what was the total amount? 50,000. 50,000 amount worth is destroyed by fire. So the total amount of 50,000 is credited here. Okay, so this amount is credited here in the trading account. Now, and that out of that, what is received from the insurance company, receivable from the insurance company, that is 12th point, insurance claim to be received from recoverable from the insurance company is 40,000. So fire insurance claim receivable is 40,000. So 50,000, this 50,000 minus this 40,000 receivable from the insurance company, the balance amount is 10,000, that is debited to the profit and loss account. That is debited to the profit and loss account, like this. See, this is the insured part of the extra loss suffered by the company. Okay, so that is debited. That extra amount which is not recoverable from the insurance company is debited to the profit and loss account. So you know that what is that effect given? The total amount is credited to the trading account, and the insurance receivable is taken to the asset side of the balance sheet. Insurance amount receivable, fire claim insurance amount receivable from the insurance company 40,000, and the balance 10,000 is debited to the profit and loss account. Okay, now adjustment entry number 12th, part 2, uninsured. Suppose in case that stocks are not insured by the fire, or any other assets are not insured by the company, these uninsured goods are destroyed. Uninsured goods are destroyed by fire. Then what will happen? The insurance company will not give the claim. So what is it? The entire amount destroyed by the fire is a loss. The total amount is a loss. So what will be done? The entire 30,000 amount, means this is an example. The amount is it is a 30,000 amount of worth material is destroyed by fire, and it is not insured. So this 30,000 is credited to the trading account. Where is that? 12. See, uninsured goods destroyed by fire. Insured by fire 30,000. That is what it is. Total amount is debited here. This is 12th one part. This is 12th second part, uninsured goods. So this is totally debited to the credited to the trading account, and that amount is the total loss is debited to the profit and loss account. This is 12th 1, and this is 12th 2. Total amount is goods destroyed by fire 30,000. Okay, uninsured goods destroyed by fire. So now you are understood. So this will not be taken to the balance sheet, because there is no insurance amount receivable from the company. Claim is not there is no claim. So that the entire amount whatever is destroyed is first credited to the trading account, credit side of the trading account, and the same amount, entire amount will be written off by debiting to the profit and loss account. Now let us see, 12th point is completed. Now goods stolen, 13th point, goods stolen. Let us see, goods stolen worth 20,000. Same type of entry is given, and entry is made, means credited to the trading account. Credited to the entire amount is because it is stolen. It is not going to come back. It is stolen. So unless and until there is that amount is not going to come back, it should be written off. So what we will do, that goods stolen is 20,000. It is credited to the trading account. 13th entry number, adjustment entry number. Goods stolen credited to the trading account, and the equal amount, the same amount, is written off to the profit and loss account by debiting profit and loss account. 13th entry, adjustment entry number, to goods stolen, 20,000. Now, what you understood this is simple as means what is we have shown earlier. It is very easy. Okay. Now, 14th point. What is the 14th point? Goods distributed as free samples. So goods can be distributed as free sample. Why free samples are given? Free samples are given for the purpose of sales promotion or as a type of advertisement. For example, you must have seen, if you have take one, and along with that, now suppose if you are taking some goods from any supermarket or DMart or any Geomart or any where if you are taking one metal, along with that some other small pouch or some other extra thing will be added with that. So what is that? That is the advertisement of that company along with that other product. Suppose if you are purchasing that other product, along with that it is attached as a free thing, that is given as a free sample, that is given for the purpose of advertisement. Okay, or if you are just distributing some free samples to anybody, that is a type of advertisement. So goods distributed as free samples is an advertisement. So what is to be done? Profit and loss account, debit profit and loss account. If there is an advertisement amount there, along with that advertisement amount, this free samples amount will should be added, and should be added and shown to the credit side of the trading account. Means whatever is the same type, means whatever it is shown here now, means a good stolen, it should be credited to the trading account, because it's a sale, almost a type of sale type. So it is though the sale value is not realizable, but it's given for the purpose of advertisement. So let us see. 14th point is adjustment entry. 14th point, goods distributed as free samples. Say goods worth 60,000 distributed as free samples. It's a type of advertisement. Say goods worth 60,000 rupees for that year is, for that entire year is distributed as free samples. So this free samples is a type of advertisement. Now what is the effect given? It should be credited to the trading account. It should be first credited to the trading account. 14th, free goods distributed as free samples, 60,000, 14th entry, adjustment entry number, and the same amount should be debited to the profit and loss account. If advertisement is there, it should be added with that advertisement account. 14th adjustment. See, to advertisement or distributed as free samples, 60,000. There is no advertisement there, so that should be taken to the debited to the profit and loss account. Okay, so this is additional entry that when the 20th entry comes, that time I will explain that. That is the reason it is taken into the outer column. If there is no other these entries not there, then it should be taken to the outer column straight away. It should not be taken here. It will not take here. So if since there is other entries also, means for the purpose of explaining, I have taken it here. So you don't have to confuse that. So right now I am taking it here, otherwise it should be taken here. Okay, so what I will do, it is first it is credited to the trading account, and then it should be debited to the profit and loss account. It totally 100% written off. Okay, it is debited to the profit and loss account. If this entry is not there, it should be taken to the outer column, dash right. It should not taken here, it should be taken here. But since there is other adjustments are coming, that is the reason I have taken it here in the inner column, and after that adjustment, whatever the amount is coming should be taken outer column. So now the 14 point also you have understood. It is not difficult, it is easy. Now the 15th point is goods withdrawn by partners for personal use. See, goods withdrawn by partners for personal use is called as drawings. Partners can withdraw cash or goods. If goods are withdrawn, that is also treated as withdrawings. So let us say partner A withdrew some goods worth 5,000 and partner B withdrew goods for worth rupees 20,000. It was taken for personal use, so it should be also treated as drawing. So now just let's see what is that entry, how the effect of the entry is given. Let us see 15th point. So it should be first credited to the trading account. It should be first credited to the trading account. Goods withdrawn by partners for personal use. $25,000. Goods withdrawn by partners is 25,000. Partner A, partner B, and then the entire amount is written off. This should be this 15th entry number should be taken to the partner's current account or balance sheet directly. If they are maintaining a capital account under fluctuating method, then it should be taken in this adjustment directly to the capital account directly. Or if they are maintaining the capital account under fixed capital method, then it should be taken to the partner's current account under fixed method. So it should be debited. Like goods withdrawn by partners, 15th entry number. I have given the numbers just to correlate that. You can just in future also you want to refer that where the effect is given. The numbers are given so that it should be matched. It will be easy for you to track down. Means where the first is, entry is given, the corresponding entry where it is given, where the effect is given. You can see. So the double entry principle is that when there is a debit entry, there should be equal and corresponding credit entry. Or if it is on an asset side, the asset side, one asset should be reduced, other should be added. Or if the one asset is increased, the corresponding liability should increase. In the same way, if the corresponding, if there is a liability side, it should be one liability is increased, other liability is reduced. It like that means that should be corresponding effect should be given. So now let us see, means that if it is if they are maintaining under fluctuating capital method, we can take it here 15th entry number. You can see this partner A goods withdrawn less goods withdrawn. See, I have given you just see that means that entries are coming like these already we have explained. Now this is a 22nd entry number. I will show you that when it comes. So 10th means these already we have discussed. Interest on capital and interest on drawings also we have taken. Drawings we have taken. Now the 15th is goods withdrawn. It is also treated as drawings. That is taken it as a drawing. So less goods withdrawn 5,000 by A and goods withdrawn by B is 20,000. Okay, so taken in the inner column. So the method is maintaining under fluctuating method is total capital is taken here, add interest on capital, add commission, add profit for the year. These are total are added, and then out of the total amount, less drawings or interest on drawings. Interest goods withdrawn, like that means if there is any things affected should be deducted, and then the final amount should be taken to the outer column, like that. Suppose here it is 2 partners, there may be some 5 partners, 6 partners, 8 partners, 10 partners, or numbers up to 20,000, 20 numbers up to partners may be more than means 10 or like that, or partners can be up to 50. No, you can you must have studied that. So normal cases, if it is more than one partners, if there are more partners, there is an additional this capital account will be maintained. If they are maintaining that under a fixed method, then this partners current accounts are maintained, and that summary of the balance, if it is a debit or credit, whatever it is, it should be taken to either to the if it is credit, it should be taken to the liability side. If it is a debit balance, it should be taken to the asset side of the balance sheet, which partner wise. So I hope you understand that. It's not confusing. No, I'm not confusing. You understand, I think. So goods withdrawn is deducted from here if they are provided, if they are maintaining under this capital account under fluctuating capital method. Should be whereas if it is a fixed method, this I am repeating again and again to make you understand better. If it is a fixed method, this account will be, this capital account will be, means 50 lakhs, it should be carried forward for a year, and all the remaining adjustments are taken to the partner's current account. So to understand you both type, that is the reason I am showing it. Okay, this partner's capital account, if they are maintaining under fixed method, if I am showing this, if they are maintaining under a fluctuating capital method, this type of entries are making. Now you understood this. These entries also made. Now 15th entry is also done. Now 16 unrecorded purchases. What is it? Let us see. 15 entries also taken. Now unrecorded purchases and unrecorded sales. This you can means very well make it clear. Means you can also do that, means because it is not difficult. If it is not recorded, you have to add it with the purchase, and the same thing to be added to the creditors account. Means ये जो last में means after trial balance prepared हो गया, final trial accounts बना रहे, वो टाइम में ये जो मालूम पड़ गया ये बिल का एंट्री नहीं किया है, तो ये परचेस का एंट्री नहीं किया है, ये पर्टिकुलर बिल एंट्री नहीं किया है, तो या कितना बिल्स एंट्री नहीं किया है, वो उतना वो परचेसेस में ऐड करके उतना जो क्रेडिटेबल, मतलब वो परचेस में जो परचेस बिल ही गायब कर दिया था, या नहीं तो किधर मिसप्लेस किया था, बाद में मिल गया, तो या नहीं तो सामने वाला जो क्रेडिटर आ गया पेमेंट के लिए, तो तभी पूछेगा, तब मालूम पड़ गया ये बिल एंट्री नहीं किया है, अकाउंट में देखा तो एंट्री नहीं है, तो क्या करेगा, उसे ढूंढ के निकालने के लिए बोलेगा, नहीं तो डुप्लीकेट बिल मंगाएगा, तो वो टाइम में ये एंट्री करना पड़ेगा। या एंट्री जो बैलेंस शीट तो ऑलमोस्ट फाइनलाइजेशन में ट्रायल बैलेंस फर्स्ट हो गया, तो ये जो एडजस्टमेंट एंट्री पास करेगा। एडजस्टमेंट एंट्री कैसा है, टोटल जो परचेसेस के साथ में ये जो अनरिकॉर्डेड परचेज एंट्री ऐड करेगा, और जितना है वो क्रेडिटर वाइज, इफ इट इज़ वन बिल द पर्टिकुलर क्रेडिटर का अकाउंट में ऐड करेगा, और इफ देयर आर मोर देन वन बिल्स, तो जितना जो क्रेडिटर्स का लिस्ट में वो उसके सामने ऐड कर देगा, उसके हिसाब से ऐड कर देगा। सेम वे सेल्स भी, सेल्स का भी अगर अंडर रिकॉर्डेड जो सेल्स रहेगा वो सेल्स में ऐड करेगा, और उतना संडेड डेटर्स को वो डेटर्स का अकाउंट में वो ऐड करेगा। बोथ आर द मेथड इज सेम, but only thing is that one should be added to the creditors account, and the other should be added to the debtors account, and one should be added to the purchase account, the other should be added to the sales account. That is the thing. Now let us make you understand by showing that example. Unrecorded purchases. Say purchase recorded, unrecorded purchase is 80,000. Total purchase is 9 lakhs. समझो. For an example I am showing you, this is 9 lakhs for that entire, the purchase is 9 lakhs, and there is a purchase bill of 80,000 not recorded. It is not recorded. So how that entry is, the sundry creditors amount, for example, I have taken in is 60,000 to make you understand. So what will be done, the trading account, purchase account, this should be added, this unrecorded purchases, and this along with this country creditors, this should be added. Creditors account, this unrecorded purchase account should be added. Now let us see. I will show you. Total purchase account is 9 lakhs. Okay, add unrecorded purchases. That is 80,000 total. If there is any returns, it should be minus, and 9 lakh 80,000 should be taken outside. This the total purchase to purchase account 9 lakhs plus means add unrecorded purchase 80,000, that is 9,80,000, less returns, that is equal to 9,80,000. You understood this? Now this entry, this is a 16.1. Now this is the second effect will be given in the balance sheet. Where is it? 16.1. See, we have taken that 6,000 as sundry creditors for the purpose of making a better. 60,000 is the sundry creditors as on 31st March. Now the sundry creditors is 60,000. So add the unrecorded purchase 80,000. What we have taken here? 80,000. This unrecorded purchase is added here. So total it will become 1,40,000. If there are no other entries, it will be taken here 1,40,000 here. Understood? So since there is one more adjustment, I have taken it here in the inner column only. Okay, like that it is. So now the other effect is 16.2. 16.2 entry is here in the purchase. If you have debited, suppose if it is an unrecorded sale, it should be credited. Credit side mein hoga. So by sales adjustment entry, say sales recorded is 18 lakhs and unrecorded sales is 1,20,000. Okay, debtors we have already shown that in that account. Previously also we have done. So this sales account 18 lakhs plus unrecorded sales 1,20,000. 16 entry number 2, adjustment entry number 2. Now since there is some more adjustment, I have taken it here. Otherwise it should be it will be taken here 19,20,000. 19,20,000 here. Okay, since there are more some more adjustments I have taken for other entries, so I have taken it here in this thing. Okay, so that is the thing by sales and add the unrecorded sales. Now the second entry will be added to the debtors account, sundry debtors account. Let us see 16.1, 16.2, second 16.2 entry number. Balance sheet 16.2. Just to correlate to you that the sundry debtors is 1,10,000. This we have shown earlier also. Where are that? See, sundry debtors, total sundry debtors receivable is 1,10,000. This we have discussed. Okay, so I am continuing with that amount only, not to make you confused. That that is the reason I have taken the same amount as a sundry debtors. So sundry debtors 1,10,000. Add unrecorded sales 1,20,000. Total is 2,30,000. If there are no more entries, since there are more entries, no, this already we have discussed. 6th point, 7th point, 8th point, this also we discussed, means bad debts, disabled doubtful debts and discount reserve for discount on debtors, ये सब हम लोग ने डिस्कस किया. तो इसके लिए ये जो एंट्री इधर रखा है. Otherwise if there are no entries, this 2,30,000 should be taken to the outer column, and that's all. And since there are more entries, I am taking the inner side only, and after all adjustment the final amount will be taken to the outer column. So now the unrecorded sales is added here to 2,30,000. Okay, sundry debtors plus added unrecorded sales. Now 16 point is also complete. Now let us see what I say. Now we have taken up to, we have discussed 12, 13, 14, 15, 16 two adjustments. Okay, 16.2 adjustment. Let us see, let us stop it here, because I don't want to make you confuse more. Whatever I explain, please read, so that now you will come to know, and it will be easy to understand, and it will be easy to digest in your brain. Okay, so now next point we will discuss in the next class, because it goes little bit more in detail. So let us take it into the next class. Okay, so You understood now what we have discussed. For if goods destroyed by fire, there are two adjustment entries: goods for insured goods and uninsured goods, and goods stolen. And goods distributed as free samples, goods withdrawn by partners, and 16 point there are two adjustments: unrecorded purchases and unrecorded sales. All both the entries I have shown, and it is, I hope it is clear. From 17 points onwards we will discuss in next class. So let us conclude now today's I request all my students to study regularly. If you don't understand, watch again and again, because I want all my students to score full marks in the subject or just close to 100% mark. And this is easy because only you have to just apply your brain and just and keep practicing. If you don't understand, drag it back and read it and pause it and do it. Work out on a piece of paper, take a piece of paper and work out how we have done, or you can take a blank Excel sheet and just do that. That way also you can do, or on a piece of paper you can start working. It will be easy. It will be easy. It is not difficult. Please read again and again, learn and practice to achieve your life's goal. Help each other to grow together for a better India. There is good scope for in the coming years, because India's economy is growing fast. So there are good opportunities coming in accounts, finance and all other fields. So please gear up and start studying. I request all you to share the videos to reach more and more people, so that many students and public can take the benefits. There are several people who can take the benefits, so kindly share it. When you share it, the more you share it, the more it will reach. It is a chain of work. Thank you for your attention.